We live? We are live. What's up, Mr. Strazza? Good morning, sunshine.
Should I do this thing from down here today?
No, you look like one of those Oompa Loompas from Wizard of Oz. You know?
I didn't know we would skip the intro.
Oh yeah, we can't hear Spencer when he said that. Spencer's down at the beach, gallivanting in the Jersey Shore. I like your
Can you hear me?
Japan hat.
I'm here.
We
know you're
I'm just in the background.
Yeah, stay there.
Well, listen, Spencer Israel, the John Facenda of technical analysis here. I'm not hungover from yesterday's festivities, Mr. Strazza. I am proud to say.
No, you had no wine with your charts last night?
Not during the conference call. I had a couple of glasses of wine afterwards, but sometimes when we do these conference calls, I get so worked up over so many charts. I'm focused all day that by the end of the day, I'm just so exhausted, and I wake up with this hangover, like almost like if I was drinking whiskey all night, which I never do. I don't drink spirits at home at all.
Yeah.
Today I did not feel that way. I feel great.
It's a big event hangover.
It's like a big event hangover. Yeah. You're just kind of like mentally drained, but not today. Not today. I've been doing this for a long time, and it's pretty consistent, these hangovers. Not today. Feeling good. Why don't we hit the state of the markets? We got some things to talk about. I want to go over a couple of big themes yesterday. I want to hear your thoughts, Strazza, on a few of these things. So Spencer Israel, if you will, can you please hit it? All right, ladies and gentlemen, we have the Dow futures doing absolutely nothing this morning, completely flat, just above 41,000 for the Dow futures. S&P futures also flat, 55 and a quarter. NASDAQ 100 futures down 1/3%, just a hair under 18,900. 30-year bond futures up 1/4%, 125 and change. Crude oil up 1% back to 70. Funny saying back up to 70. Copper up 1%, 412 there. Gold up 1%, 25.5. Silver up 2%, 29 and change, with the volatility index down to 21. Over in funny money land, we've got Bitcoin just under 58,000, up 2/3% this morning. Ethereum 2450, up 1%. Solana leading the way this morning, up 4.5%, 133 for Solana. Binance still sucks. At 500, down 2% on the day. Total crypto market cap, Spencer Israel, 1.985 trillion, just a hair under 2 trillion, with the Bitcoin dominance still hitting new highs, 57.5%. First of all, before we get into some of the charts from last night, what stands out from the futures, Mr. Strazza? Anything?
Nothing. No.
Big nothing burger. Is this week... You know how you talk about like the parking lot effect about, like at hedge funds, around Labor Day, last week of August, nobody's in the office, everybody, all the low men on the totem pole get a better parking spot. Does that carry into this week, or is it just a week before Labor Day?
I don't think that this is a big week for it.
So you think that people are back already, or they're back next week?
No, they're back.
They're back.
Labor Day's not as big as you think. Like 4th of July was a big one. Like Labor Day, it's over. Like people are ready to get back. Like summer's already over. Christmas, that happens and the parking lots are empty. But I don't know so much about this week. I really don't know. That was 10 years ago.
No, that's fair point, because all the kids are already back to school. So if you got kids, which a lot of these guys have kids, they got to be back, right? So that makes sense. All right, so the big boys are back. So none of these excuses of this is a boring week, that's why there's nothing happening in the futures, none of that, right?
Also, I think the big development here this week is more bond market. Like, are rates breaking down?
Hold on. You're stealing my thunder. Spencer Israel, slide 2, please.
That's what stands out, if anything, in the futures market.
So we're coming in hot, buying bonds this week. Last week as well, for that matter, right? So it's not just this week. This has been.
Oh, you like this? Yeah. This is good, right?
So here's the question. So everyone's making a big deal out of this yield curve inversion and how it means it's a recession. I think it's like a prerequisite. Anybody who talks about the yield curve has to also mention the recession implications regardless of whether it's true or not. Is that right?
Yeah. Yep.
So like if you talk about the yield curve, even if you have no idea what you're talking about, you have to pretend that it means that a recession's coming. That's like a hard rule, particularly on Twitter, right?
Yes, but for this chart, we're focused more on like it uninverting, and forget stocks. It's or even a recession. What does that mean for bonds? Like we're keeping it really simple in this one, right?
I have an important question. Next slide, if you will, Mr. Spencer Israel. I put out a poll yesterday on the Twitter asking which verted is it, uninverted, disinverted, or reinverted? Anybody want to weigh in on the chat? A lot of votes for uninverted.
When we were writing this blog post, this conversation came up, and it lasted for about 10 seconds before I was like, uninverted is going to be a word for purposes of what we do here. Because what else do you call it? It's uninverted. I was told that's not a word.
What about reinverted? No?
No. Disinverted?
I'm asking. I don't know. I wasn't an English major. Thank God. That would have sucked.
We have people on our team who know the answer to this.
We do.
But I like uninverted. I'm just gonna go with that.
We have wordsmiths on our staff, right? Do we not? Shouldn't we be asking them? Dittman, you out there listening? Come on, buddy. What do you got? Which one is it? A lot of votes for uninverted. You would agree with that, apparently.
Yes. We went.
Also, half the votes coming in were "What the fuck are you talking about?" So that's.
I like that. Like, what does it really matter? But go back to the chart, because seriously, when people say any of these inverteds, this is what they're talking about. So we circled where it uninverts in the past. And sure, that could mean things for other risk assets. It could mean things for the economy. Of course, you could go read the white papers about all that. But look at what it usually means for bonds when it uninverts, right? It's typically just coming out of a nice reversal pattern, and it's a time that you want to own bonds. So I don't know if this time will be any different, but I don't think we should expect it to be.
Do you think this means that a recession is coming? Because that's what I keep being told. The guaranteed recession, no matter what happens with the Kamala or the Biden or the wars, it guaranteed recession when we have what did we decide? Uninvert? Reinvert? What?
Look, I'm not your guy for that. That's so far over my line.
You're more of the guy than I am.
I live on an island. I got no boots on the ground data over here. I don't know what's going on in the real world. Okay, so not an economist. Still not.
Strazza lives in fantasy land in a forever vacation spot, right? Is that right?
I live where people go on vacation. So
But you actually do.
Zero read here. Yeah,
you actually do. It's like people in Miami. It's like, oh, we live where you vacation. It's like, bro, you live in Hialeah. You don't. Nobody goes there. In fact, the people who live in Miami avoid going where you live. In fact, so you don't. Right?
Yeah.
You actually live where people vacation.
Some people live here. They're just mostly crazy.
Are they? You got to be a little Looney Tunes to live in Key West.
Really, everything you hear about Key West is true. It's a magical town, but most people are a little crazy.
Yeah, they're avoiding something. Like they're down there for something.
Not all of them. Like that's the common thing, and you do see that a lot of kids come down here and they work at the bars and restaurants. But a lot of them are like artists and just like creatives and musicians, and they're just weird. They're just they're different.
Yeah, they're weird to you, Mr. Greenwich, Connecticut hedge fund.
Weird. No. Weird is a good word. In this case, I'm using it.
No, it is. It's like Austin says, keep it weird, right? I think.
Yeah. Well, down here, you'll get shirts and stuff. They call it Key Weird. So yeah.
Oh, okay. That's cool.
Embrace the weird. Yeah.
Stock Market Mike wonders whether you should visit Key West. I think you should.
Come get weird. Let's go.
Dude, those comforters, man. Oh, they're so good, dude. They're so good. Okay. I have another next chart. Spencer Israel. Next chart, please. This is a good one. I want to hear your thoughts on this because this is right up your alley. I am being told, Mr. Strazza, I'm being told not only are we going to get a recession because of this uninversion or reinversion or disinversion of a yield curve, but this head and shoulders top is going to drive markets lower. This is the end. You had it coming all along. I was right. I told you I did not relent. I was right all along.
Listen, this is a relative trend, right? That's what's important. Is it good to lose the leaders? No, but where are we in the cycle? It probably, it's going to happen eventually. They're not going to lead the entire time. They're not going to outperform the market, the way that they've been outperforming for the past year. So I don't think it means party's over. I don't think it means end of bull market, but it probably means we're getting close to the end of the bull market.
You think?
Yeah, I do. I don't.
Is it because of the yield curve?
That's not early cycle stuff, right?
If it were to complete. Now, what do we know about bull markets? That these head and shoulders tops don't turn into exactly that, and they rip.
That's the better point. Right.
Which do you think it is? Because here's semiconductors on an absolute basis.
Listen, I don't know, JC, but these guys got to get it together. Right now, it's not good. Bears are in control of this group right now.
Hold on, settle down.
Yeah,
settle down.
I don't know.
Look at this chart, and I want to zoom in. Actually, do we have the ability to zoom in here? I think we have the technology, don't we? Let's see. Here we go. I'm going to zoom in here.
We got the tech.
So we could really take a look at what happened here. So we got the long-term chart. These are the key Fibonacci extensions, and then I'm going to zoom in here. Spencer Israel, if you will, the new slide 6 here zooms in on exactly what we're talking about here.
If we got the new semiconductors, we could definitely zoom in.
If we got the new semiconductors?
Yeah, that's semiconductors do this, right? It's like you got to have the GPU to zoom in.
Oh, I see what you did there. I see. Oh, clever. All right. See? All right. Somebody's thinking. All right. So zoom out first, Spencer. Go to the longer term chart. So this is what it looks like longer term. These are the Fibonacci extensions going back to the dot-com bubble highs. This was what? I mean, we're talking 12, 14-year base, 13-year base. It was a lot. It was big base, right? Longer. Wait a minute. We're talking about 20-year base here, right? 20-year base in semiconductors. Finally broke out, respecting these key Fibonacci extension levels. And now zoom into that 200. And look what it did last month. It sold off, literally kissed that 200 level, gave it a nice little smooch, and then bounced from there. Tell me that 200 is not the level for semiconductor, Strazza.
Yeah, 100%.
So if we lose semiconductors, if semis break below 200, we lose the semis. That's it. Recession, market crash, world's coming to an end.
And then that will. So you're looking at a monthly here, but then that will also that will look like a head and shoulders pattern, just like the one that you showed on absolute terms, right? And below 200 in SMH means that we're actually taking out the pivot lows from August 5th, right?
So that happens. So that happens simultaneously. So go back to the head and shoulders on a relative basis. So the head and shoulders top breaks, and semis on an absolute basis lose 200 at the same time. That's what happens.
This will go a few days first, a week first. Typically, you usually see.
Yeah, that's probably a good point. That's a good point. You'll see this break first, and then on an absolute basis, you'll see the Nvidia. Yeah, that's probably true.
If you're worried about your semiconductor holdings, I think this is the cheat code, right? Because they are the laggards right now over the short term. So this will break first, the SMH SPY, and then you could basically look at SMH and anticipate that maybe 200 goes, and that top completes too. But here's the thing, JC, the bigger problem is the way that they're selling these things off when they get sold. Like down 6% now, 3 days. We were down 7.5% in the SMH coming into this week on Tuesday.
Now they also tripled this bull market.
Yeah, but that's the kind of volatility you see at inflection points. It's the kind of volatility you get at turning points, is it not?
We've seen that sort of volatility before in semiconductors when they have corrections.
We haven't seen it since March of 2020, and we've had 3 days like that since July 17th. My birthday, it all fell apart.
In April, semis got hit real hard in April, bounced back with a vengeance. Semis got hit last summer, came back with a vengeance. I don't know. I don't buy that this time. I think, listen, I'm not saying that you're wrong. All I'm saying is if you are questioning the 6% downside move in semiconductors, I think it's important to put it into context that semiconductors as an index tripled this bull market.
Why don't you ask Ari? Ask Ari what he thinks of my chart.
You goddamn right I'm going to ask Ari. Goddamn right I'm going to ask Ari. Can we talk about something? Because you made a good point yesterday. You make good points sometimes.
Yeah.
It's important to mix them in. You can't just say dumb shit always, right? You got to mix in. So you do a good job of that. Yesterday you said something good. You said, I'm looking for less correlated things, right? Hence why we're buying bonds, some metals, palladium, natural gas. Like we've been doing natural gas. Here's the thing though. You make a good point. It makes sense to look for less correlated things, right? Yes.
Yep.
It hasn't been easier to find less correlated things. Here we're looking at the rolling correlation, 3-month correlation among S&P 500 components down near the lowest levels this entire bull market, because as bull markets progress, correlations drop off, right? When volatility spikes, correlations shoot to 1. And then as that bull market progresses, those correlations come off. So what this math is essentially telling us is that it's easier than it has been this entire bull market to find things that are less correlated with that overall market. Let's just go over a few important names. First of all, American Express and Berkshire Hathaway making new all-time highs, right? American Express. Nobody can afford anything, I'm told. I don't know. American Express making new all-time highs. My Amex bill is pretty high. And then my wife's like, hotels tonight? What is that? By the way, I love hotels tonight.
Oh, fantastic. I'm like a level 6 customer. I
waited too
up
long
there
to get my hotel for future proof, so the whole freaking town is sold out. I got to stay in Newport again. Same thing happened to me last year. What an idiot I am, huh?
I'm going to do the same thing. We were going to get an Airbnb, but now I think it's just me and Patrick. So,
all right. So I'm staying in Newport. No big deal. All right. So Amex making new all-time highs. Berkshire making new all-time highs. How about Visa? Does this look like the end? Does this look like a top? Or does this look like a structural uptrend, healthy multi-year consolidation, a breakout, a retest? Does this look like a top to you?
It's good.
I got
good
some
stock,
superlatives for you. Visa.
I like that.
550 billion market cap. Holy fuck. 550 billion market cap.
Wow.
Did you realize it was that big?
Dude, all these businesses are absolute
13th
monsters.
largest component of the S&P 500. Third largest component in the U.S. financials index, behind only Berkshire Hathaway and JP Morgan. Visa.
And then MasterCard is like right there.
Yep.
They're massive also. Like they're
also
huge too.
7th largest component of the Dow, over 4% weighting there.
99% of the times you buy something, what a business. How good is that?
I don't know anything about their business, but something's going right.
You got a bunch of pieces of plastic in your pocket, in your wallet, and when you swipe them,
I only use Visa because some places I go to are too cheap to accept Amex, so you need to have a Visa. It's the only reason I have a Visa. I try to put everything on Amex. Amex is freaking awesome. Anyway, next chart, Boeing. Does it look like Amex, Berkshire Hathaway, or Visa? Looks.
This is short.
I know, but against
short
what?
This. No.
Right, it's a disaster. This thing's terrible.
Like from one great company to a terrible one.
Point,
wow.
Strazza, I just want to make the point that you've got stocks doing very well that look great. You have stocks that are in a messy range, and you have stocks that look like shit. And what's wrong with that?
No, that's pretty par for the course,
that's right.
Yeah, I'm okay.
I got one more. I got one more chart for you guys.
Would you short Boeing though? You would short this here, or you would wait?
I don't want to be short right at support, right at potential support. So I really want to see them lose those April lows, and then you got to short down to below 120 is your target, right? Obviously. Honestly, I would prefer. I would prefer to be long this name, but I can't get long until we're above 172, and we're nowhere near that. So I'm open-minded. The point is that there are different setups. Is really my point here.
I wouldn't touch this.
And then I got one more. If you will, Mr. Israel, if you could throw in new slide 11 here. This is Shark Ninja. This is I thought these were vacuum cleaners and blenders.
I told you this company was a buy when it IPO'd. You never see this. Dude, great products. We talked all about this. Spencer, find the tape. We talked all about this. Some fantastic vacuums, great blenders.
Now I got my wife asking me why I'm looking at women's vibrators on Amazon. Because I was just looking at the Shark Ninja products, and it leads me to all these vibrators. Man, they're getting
Ninja has nothing to do with sex toys, my friend.
Apparently it does.
Nice try.
My wife thinks I'm a weirdo. Just doing a little research on Shark Ninja. No big deal. No big deal. Man, they got some products. I mean, some of those look like they hurt. I don't know.
That's what they call it at your house? Researching Shark Ninja?
I just want to see what's going on, man. Just want to see what's going on. Anyway, that's what I got for today. I think there are stocks doing well. I think there are stocks doing poorly. Correlations. Throw that correlations chart one more time before we bring Kenny on. Just to reiterate, I think this is an important, just an important theme to keep in mind. It's just characteristic of bull markets, characteristics of, bull markets that are getting, more and more age, right? Correlations are off. So I think this is the best time to find both winners and losers. Right. All right.
Now I'm just pissed off that I didn't buy Shark Ninja.
It's not too late. You're the one who's the expert on the products. I mean, I don't know. Sounds like you're.
There's so many stocks, so little time.
I do know. All right, why don't we bring in Kenny? Speaking of women's vibrators.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house. How you doing? You're on mute. First timer.
That's not me. That's not me. I'm in the green room.
That's not my bag, baby.
Yeah,
that's not mine.
Shark Ninja. I think we got something. So we had Sharknado. We had Santa Jaws. Let's go Shark Ninja. Has that been made yet? Coming in 2025. Shark Ninja. What's up?
Oh, wondering if this is still a bull market. Excited for the fall. It's my favorite time of the year. It's very, very nice. Very nice. Very nice.
I am a little concerned. I think it's still a bull market. Again, it's a perpetual bull market, apparently. But UVXY, my friends.
Talk to me.
Doing some strange things. There's a bid on it for 2 days in a row. And right now it flirted with going green this morning. We got everybody's on pins and needles with economic data. That's bearish. Bull markets don't care about economic data. Bull markets don't care about anything, especially how you feel. So that's my only little hiccup right now. But the trading has been phenomenal. If you've been sticking with stock-specific, stocks in the news, just amazing action. And again, the end of August, normally a dead time. This week was normally, kind of slow. We're banging every day. And so I'm going right back to the, some of the old faves. Remember AI Reporter, the original AI stock. We bought this name back when AI was starting to become a craze, and nobody cared if they even had any AI technology. The symbol was AI, and that's
enough. That was enough.
Yes, Siberian. Those are the Siberian outpost days, the pets.com kind of craze. But again, I haven't looked at the stock in pretty much a year, and it's getting smoked. So again, very simply, I look for these stocks to recover back over VWAP, and if they can get something over those pre-market pivots, I'm a fan. So again, I'm looking at that. Our big juggernaut of the day, HPE, reported. So again, I'm never looking at these stocks. I don't look at HPE ever. I know they split up.
This is the good one. This is the enterprise one.
Right.
There's a good one and a bad one.
Yeah, and it's, again, low volume, but easy setup, because when a stock's reported earnings and it hasn't broke over VWAP at least once, that first break is usually good. So I'm going to stalk some HPE. And again, going back to UVXY, it popped already and now it's dropped. So that gives you a little bit more reason to think that this market could rally. But
so let me ask you this. So for something like this, you are betting that the deterioration is greater than the carry?
Deterioration is bigger than the carry. Those are big words, man. You're thinking too deep. You're thinking too deep.
Well, you're shorting a leveraged ETF, right?
Yeah.
So if you're shorting a leveraged ETF rather than buying the other leveraged ETF, what you're doing is you're betting that the cost of carry is less than the deterioration you're going to get, right?
Right. Well, this product, if you don't know, UVXY, it's really just leverage to the day. Again, when it had that monster move in the beginning of August, gave it all back and then some within 15 days. So as soon as the fear, and again, when you have data releases that everybody's waiting for and a little bit anxious, as soon as that comes out, if the market doesn't react completely batshit, then this thing starts to disintegrate and you can make money again. You have to borrow it every day. If you guys know about that, sometimes it's easy to borrow. Sometimes you could just short it. But as an indicator of strength of the market, when you see UVXY trending up and you're waiting for this market to rebound, it's not going to happen. You want to see UVXY start to fall. That starts to solidify the idea that this market could find some footing and then rally. So again, the correlation between S&P, QQQ, and UVXY, when there's not a lot of earnings reports going on, that's what I'm focused on. And it's just a great trade and also just a great indicator of strength and fear. So again, tomorrow we have some big economic release again. And if we get through that data,
what do we got tomorrow? Is it the PMS? What is it?
Yeah, it doesn't even matter. I know there's a big one out there. Like I said, I'm off the internet. I'm not even listening to the news anymore.
Is it the farm payrolls this time? Because they always seem to be doing the non-farm payrolls. I'm more interested in the farm payrolls. Is that tomorrow?
I'm interested in the Amish payrolls. Yes, that's what I need to know. What are the Amish doing? The Amish indicator. It's a very lesser known indicator.
Let me tell you something. These Amish folks are some gangsters. Let me tell you something.
Some
man.
are.
Holy shit. I live in Pennsylvania, so people are like, "Oh, are you close to the Amish?" I'm like, "I'm not close enough. They live too far. We need them closer." These people, let me tell you something. They can build. Man, it is very impressive. Very impressive. Very affordable furniture. They build like kids' play sets.
Oh yeah, Jebediah doesn't mess around.
Oh, these guys. Wow.
Jebediah. But yeah, to your point, UVXY, yeah, big moves yesterday. Very big moves. So again, I'm looking for a big move, hopefully to the downside, and that'll trigger some buying. But the Qs got to where I thought we can get to. We got to the 1 month VWAP, 3 month VWAP. I see a great trading market. Again, I'm so liquid right now. I'm like water. So I'm not putting on positions. I'm not doing any call spreads right now. I'm waiting and biding my time because the activity hasn't gone away. And when earnings season comes around again, we're going to have too much to do. So I don't want to be worried about positions.
Give me one more, Kenny. Something on the move.
ASTS continues to be on the move. They announced the launch date. You're seeing some profit taking today, but the stock continues to find bids. It wasn't a little downtrend.
Launch date, like literally like going to the moon?
Yeah, literally going to the moon. So if this stock's at all-time highs, I say you continue to buy it. And it flirted with them yesterday. You're about 3 points away or maybe 2.5 points away. Above 40, this thing goes to 50. And if it gets into the 50s, we all know it probably goes to $80. So again, these stocks continue to baffle me. They don't have any earnings. There's no way to really base them on fundamentals or anything like that. But as long as the bids keep showing up at the end of the day, that tells you that there's some real buyers out there, and we'll continue to play it. So keep an eye on that one. I love it. And Serve woke up, the little robot. I forgot what exactly they do, but SERV. I'm still into the robots in space and the AI trade. Those are my focus on my focus.
Serve, 100%. I think it's like a restaurant thing.
Yeah.
Yeah, I think it's like a restaurant. I don't think it's like a drug dealer thing. I think it's a restaurant thing.
I think it's the robot that serves you drinks. I'm not sure exactly which one is which anymore.
Yeah.
But yeah, I mean the activity, like I said, as long as there's something going on, and yesterday was phenomenal till 11:30, and then we coasted a little bit, and then you had some decent action at the end of the day. So again, I'm looking forward to tomorrow, and usually I'm not spending the whole day sitting at the desk, but tomorrow I'm going to probably be here all day waiting to see what happens at the
final
close.
question. How many losses for the Jets this season?
9 at least.
9? That's not bad.
Yeah, at least 9. 10?
At least 9. I'll take the over.
But right now, the bet is fading the Yankees. They are awful. The bullpen stinks. And if Judge and Soto aren't carrying the team, they got nothing.
Do you bet on sports ever? I don't. Do you?
I bet on sports every day. Yeah.
Do you?
I bet it's basically the same thing as, again, I've been gambling since the 5th grade. Football sheets. The guy next door to me was well, let's not talk about the guy next door to me. But I've been doing football sheets since, again, I didn't even know what I was doing. And so now with the live betting, you see Clay Holmes coming in on the Yankees closer, and they're only up by 1, and you're getting plus 440. Imagine you can be able to call your bookie. Yeah, I think they're going to blow the game. Can you put 100 on this? That's what it is now. So it's like everything you wanted as a gambler for 30 years is now accessible in your hand. So
what
it
could
is
go wrong, right?
You could
What
bet
could go
pitch
wrong?
by pitch if you're that crazy. I know my buddy Brett was betting pitch by pitch at the Baltimore game. That was insane. But it is amazing. And again, no better bet is when the Jets are up in the fourth quarter and you know they're going to blow the game and you could get the odds in your favor. So I love it because, and again, with baseball, there are streaks and that's basically trend trading. So streaks in baseball and trend trading in the market, it's the correlation is just absolutely
I'm gonna have to
phenomenal.
do a gambling show one of these days so I can get better at this. I am a terrible gambler. I know a couple of things about sports, you know, some sports more than others, but man,
Right.
I
But
am
it
not a good
hurts.
gambler.
It's better. It's just like trading. The less you think about what you're with a trade, you're kind of feeling it.
I
But
bet on the debate when it was the Biden and the Trump. I bet on the debate. I had China as the first country mentioned. I had it at plus 375. I won $750, man. It's a lot of
man,
money.
I put in a Michelle Obama president. I bet $100 that she was going to announce that she was going to run. I could have won 3,500, but she didn't do it. So.
I'm looking forward to the prop bets for next week. I'll get involved. I got some, I'm playing with house money at this point, so I got to do it.
Hey, we should do it. We should do a Sunday morning show. I got no problem talking about the Jets and the Giants and streaks and Again, the teasers are usually a bad bet, but when you start to establish what teams are really good, you tease them down. You have to, again, the parlays are why everybody loses money. But when you have some I was going to say some stocks, when you have some teams that are just clearly better than others, that's when you tease them down. You combine them, like I did with Penn State and Georgia. What's up, Penn State and Georgia? Good bet this week. Sticking with that. Again, it's all streaks. And we can talk more about that. Yeah, anytime you want to do a gambling show, I'm ready.
Maybe we'll have to do that. Kenny Glick, ladies and gentlemen, Spencer Israel, drop the link if you want to hang out with Kenny in his room. Buying the breakouts above a VWAP, selling the ones that break down. Nice mean reverting strategy. I like it a lot. Adios, Kenny.
See you.
Jefferson. We gotta bring back some of Kenny's old bits that he's done over the years. Kenny Glick, the original Wall Street Jesus. He would be there on the corner of Broad and Wall, telling everybody which stock to buy. This was many years ago. It was really funny. We should bring some of these videos back. We have a very special guest today. One of my personal favorites, Mr. Ari Wald. Is he here, Spencer? Do we have Ari? Do we? No, maybe. Do we have Ari Wald? I know Spencer's Ari is here. Why don't you bring in Ari, Spencer? Bring him out. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Wald.
What's up, JC?
How are you, my friend?
I am very well. Thank you for having me back. Good to see you, my man.
Listen, not to start on all this stuff, but my understanding is that the yield curve is going to bring down the whole economy, and the fact that the yield curve is reinverting, disinverting, uninverting. Which one is it?
Well, it's less so the curve. It's more so the cut with the curve inverted here. This was our case from 2022. If the yield curve is inverted, because the Fed is intentionally doing that to remove the risk of runaway inflation, as was the case in the 1970s, which was the threat to the market at that time, we welcome that. And what do you know? The yield curve inverted almost coincidentally with the bottom of the stock market in October of 2022. And we've had this now coming up to a 2-year advance, all while the curve has been inverted. But what we found, and it's kind of be careful what you wish for as we get closer to this Fed cut. One of our established viewpoints has been that by the time the Fed, cuts its policy rate, market will be usually closer to its top than its bottom. Won't be a concurrent imminent sell signal. Kind of some of the roadmaps we found before, looking at prior bull market cycles that have developed against tighter monetary policy, is that Fed cuts could have a very interim rally in the market. Small caps peak shortly thereafter, large caps peak after that. So it more or less marks the beginning of the end. So as we get closer to this Fed cut with the yield curve inverted, as the bull market now pushes into its third year as we get to more average thresholds of typically how long these cycles last. We're going to be on the lookout for a top. Again, I think it's more of a 2025 reset story. Not there yet, but underneath the surface, some yellow lights are beginning to flash. Thinking in terms of the leadership of the market in particular, and with seasonal headwinds upon us as well, want to be open to what could be a counter trend setback here over the near term.
What do we got here? This is the first chart that you brought in. Why don't you walk us through what's going on here, Spencer, if you want to zoom in so you can really see what's happening.
Oh yeah, so this is big picture. So, traders can take a break here. This is not looking at any near-term trading signals. We're looking at a long-term monthly chart of the S&P going back to the 1970s, overlaid with the 10-year minus 3-month Treasury yield curve. And what the table on the right, we're looking is a study we put together looking at 12-month average returns for the S&P 500 based on 4 different buckets, based on whether the yield curve was positive or inverted, and whether the last Fed policy action was a hike or a cut. And what we're showing here is, generally speaking, market returns have been better when the yield curve has been positive. But if you were to dissect the poor performance when the curve has been inverted, what you'll find is that there's much more concentrated weakness looking 12 months out when the curve is inverted and the last policy move has been a cut. We can see negative returns for the S&P 500 over a 12-month basis, looking at data going back to 1972. And so that's why even coming into the year, it was this idea of buy the speculation, sell the news. There was anticipation of looser monetary policy coming into 2024, and the equity market started to rally. We welcome that, but we said that a lot of that good news could possibly be priced in by the time the Fed actually does cut its policy rate. Not quite there just yet. Does it happen in September? Likely so. And again, not going to be an imminent sell signal, but could mark the beginning of the end of this bull market cycle.
You alluded to the leaders. What would happen if we lose the leaders? The chart making the rounds on the old internets is the following. It is arguably the most important industry group on the planet. I'd love to hear your thoughts on that. Relative to the S&P 500. So first of all, would you agree that semiconductors are, and not just because it's cool now, I'm saying always, semiconductors most important industry group?
Well, it's an important industry group. I don't know if it's the most important industry group, but it's an important industry group.
Such a political answer. What a cop out, Ari. What's more important than semis?
From a constituent standpoint,
I mean, is it homies? Is it financials?
Cyclicals?
Industrials?
I think these leaders come and go, and I think my take on semiconductors is that they should remain long-term leadership. I think what we're looking at here. Yes, okay. Let's. I'm going to agree with you here. This is an important industry group. It's a cyclical industry group. It represents market beta. Typically, you'll see this industry group outperform in a rising market and underperform in a falling market. And so when they're outperforming, it's typically good for the market. And so what you're showing here is this more recent underperformance. And this speaks to the change in market leadership. You can kind of look at most risk on cyclical areas versus the market, and they've rolled over. Why? Because all the relative strength has been in low volatility, low beta sectors and industries in recent months. We've seen this change in market leadership concurrent with the rate breakdown in early August. This is the shift that we see playing out underneath the surface. This is the reason our views have changed since that July-August period in particular. Again, think it's more of a yellow light rather than a flashing red. I think there are areas of the market I would be more downbeat on than semiconductors. I think there's still a lot of support underneath them from a longer term basis.
Does this resolve lower, Ari, or do they stick them? Do they stick them? Do they come in and buy them up? Or does
eventually, yeah. Again, I think we're in a tech and growth-led secular bull. That's still middle innings. With that said, from that longer-term basis, not going to be a straight line higher. There's going to be checks and balances along the way, ebbs and flows. We've seen resets. It's attributed to what we've argued has been this underappreciated steadiness to the move. And now 2 years into this cycle, again, we think 2025 could be another one of those reset years. That sets up for the next big opportunity in that area. So it's kind of trying to navigate these cross currents. Near term, yes, we've been trying to kind of use low volatility as a seasonal hedge. And again, I don't think this market cycle is necessarily over. I think there could be a point where semiconductors even rally into year end, but we are seeing a shift. And the slide that Spencer has so graciously brought up here is just kind of what is the quality of the next rally going to look like, or even looking forward, what has changed and what hasn't changed since that big volatility spike in July. What has changed is the market leadership. That's the lower panel. Here we're simply looking at it as high beta versus low volatility, which probably looks very similar to the semiconductor versus market chart as another proxy for a higher beta industry versus the market benchmark. And that is what has shifted. And that is what has broken lower towards low volatility. It's this more defensive leadership concurrent with the rate breakdown that we saw, as well as bond proxies have outperformed as interest rates have moved lower.
So so we got two things happening here. First of all, the percentage of stocks on the New York Stock Exchange above their 200-day moving average continues to be impressive and supportive of a bull market. Meanwhile, high beta versus low volatility hitting the lowest level since November, yesterday. Mixed signals?
Mixed signals. And it's kind of, again, navigating this cross currents. It's kind of, on one hand, we're arguing we're not at the cycle top. What we're arguing is that there are trends and conditions that we're starting to see signs of we're moving towards that. So we're seeing this shift in leadership, but it hasn't shown up in market breadth. For instance, in that middle panel, we are showing the percentage of NYSE stocks trading above their 200-day average. We have this metric going back to the 1990s. And what we found is that most of the major market tops over this 30-plus year period, where we've seen new S&P highs undermined by a reading below 60% in this metric. So we haven't seen that this time around, currently coming off a reading of 65%. So market breadth is broader than a market top. So again, it's trying to navigate the cross currents. Don't think the case for a cycle top is compelling here, but there are some subtle signs that we're starting to move in that direction. Some yellow lights, most notably this shift in market leadership towards defensive areas and defensive sectors.
All right, Ari, I got a good one for you. If you wanna take the chart down, just Ari and I, just man-to-man conversation here. This is a legit question. Ready?
Okay.
Mr. Wald. A month ago, 6 weeks ago, sentiment was coming in hot, right? Complacency was dominating the markets. The VIX at 10, the put-call ratio non-existent. Newsletter writers, most bullish ever. AAII, all of these things, just bullish, complacency. And then what happens? From volatility contraction comes expansion. You had the VIX triple overnight. You saw a little bit of havoc, if you will. Sentiment reset hard. Largest 2-week change in those newsletter writer bulls since 1987. Just massive unwind. The VIX went from 10 to 65, right? From complacency to panic, virtually overnight. So here's the question. The question is the following. Was that the warning shot before something bigger comes in, which we've seen many times before, right? That initial volatility spike that's like, the cockroach theory. There's not just one, there's more coming. Or was that the necessary market action to reset the overall complacency and extreme bullishness in the market, and now we can resume the bull market, right? So the warning signal that much worse things are coming, or the sentiment reset that was necessary, and now we can move on? I think that's a pretty good question. What do you think?
No, that's a great question. And I'm going to give a shout out to our mutual friend, Mike Hurley, because he shouts me out sometimes, and I want to shout him out with some of his terminology. The fall day was July, August, the fall day.
You know, it sucks that we're all friends because we're saying we're saying the same thing. Yesterday we had this debate internally, and I brought up Mike Hurley. So funny. All right, go ahead.
Yeah. No, and because I would argue in terms of just sentiment of the market, optimistic. It was optimistic for the entirety of the year. We saw very similar readings and a similar move in the sentiment polls, even in April too, where we had a very large 2-week change. And kind of we've said it's one piece of the mosaic. I'm fine with optimistic sentiment alone because it can linger through a bull market. I'm fine with optimism and complacency if all the other pieces of the puzzle are strong, and we had strong momentum and strong leadership, high beta outperforming and broad-based breadth. Now we've had and I think things have changed through the July-August period. We had this breakdown in interest rates. I'd argue falling, that's not a good thing. Be careful what you wish for. By the time rates start to fall, it's the market starting to price in more imminent recessionary expectations. We've had this change in market leadership as well. So the cycle had, for sure, how I see it, had changed during that July-August period versus anything we had seen before that over the prior, 20 months. And so now, as we had this kind of little bit of a mini washout, which we've argued those VIX readings were more consistent with a market bottom than a top, and we've rallied back, and so the sentiment polls have rallied back. But now we're dealing with optimism combined with moderating momentum, defensive leadership. Some breadth is still more positive than not, I would argue, but now they're starting to, these cracks are working their way into the equation. So all the more reason why I think the higher sentiment readings are more concerning now than they were at the start of the year.
So not a sentiment reset, maybe more of a warning shot of more to come.
I think so. Again, it's kind of fractal. I think seasonally, obviously September, October, it almost seems silly to talk about it, right? It's like this idea that markets are weak in September and October, but it just works, doesn't it, JC? And
my theory is because that whole seasonality thing shifted like in the 1950s, right? And then people claim that it's because American economy got away from the agricultural based economy and more into the industrial whatever side of the economy, and so that seasonality changed after the 1950s. What if it's that everybody's all excited about football season and they're distracted about the market, right? So the market sells off in September and October, and then by the time November comes and people realize that their team sucks and they're not going anywhere, they get back into the markets, they start buying stocks, and we rip into January. Any validity to that theory?
Yeah, there could be that, right? That there's the fundamental reasons of why this is occurring, right? I believe that there is a seasonal shift to earnings and whether
like Eagles fans think they're going to win the Super Bowl. We all know better, but you guys think that you got a shot, right?
Hope springs eternal, JC. I mean, it's like there's a great T-shirt where it's like, oh, I'm so excited for the season, and then you cycle through it and it's like you get let down once again. But yes, hope springs eternal, and I think this is going to be the year, JC. You watch and see.
What about
seasonals are poor though? But here's the thing. So again, I think we're set up. I think it makes sense. That's secondary confirmation for us. I would never tell any of my clients to sell their stocks or be wary of a market correction because we've entered the month of September. But when you push up against those headwinds, and I would argue tactical conditions aren't necessarily attractive here, I think it makes it a little bit more compelling. Now, again, I would be calling this a correction in an ongoing uptrend. I think the cycle is still intact, and I think we're probably set up for another one of those year-end rallies. I don't think this year-end rally is going to look like the last year's year-end rally, which was a pretty strong move.
Very few
and
look
so
like
I want to
that
be
already.
open to, again, as we push into the third year of the cycle, which now we're starting to hit kind of average levels of when these cycles typically peak out into a post-election year, years that have historically been associated with market softness. want to be open to what does the quality of that year-end rally look like?
Let's talk rotation while we have you here, Mr. Ari Wald. Haven't been getting new all-time highs in technology and semiconductors, as we discussed. Remember, a lot of people were complaining before that it was only technology and semiconductors. Now it's anything but that, right? Now they're still complaining. So people just like to complain. You're getting new all-time highs on a monthly closing basis in utilities, consumer staples, 52-week highs in REITs. Arguably a defensive tilt. Although, from that 2003 to 2007 period, that was a great bull market. We remember it well. We're roughly the same age. It was early in our careers. Utilities were the market leader, a strong leader during that period. Healthcare also making new all-time highs. I have the data. I understand the defensive tilt. Healthcare is also the second largest component of the Dow, third largest component of the S&P 500. So can we lean on that defensiveness all that much, considering how massive it is? New all-time monthly closing highs in materials as well. You saw it in the S&P Chemicals Index. New all-time highs in financials. New all-time highs in industrials. New 5-year highs in European banks. These other things don't strike me as a defensive rotation like a Utes, a Staples, a REITs, even a healthcare. European banks making new 5-year highs. That this doesn't strike me as defensive rotation. And then finally, U.S. Treasury bonds yesterday, the TLT closing at the highest levels all year. Is that defensive? So can you talk to me about how you think about all of these different things? Because it's a little confusing, right?
Yeah, I mean, it gets back down to this mixed evidence here. I would argue, I think I would argue that a lot of that list sounds more defensive than not to me.
Financials, European banks.
How do they look? They made a definitive new high here. Didn't they sell off after making that new high? Weren't they rejected? I was just thinking of the Europe 600 overall. I didn't break.
I mean, they're on a daily basis. European banks got to the June highs and are still stuck below that on a closing basis.
They failed at that resistance. I don't think there was a definitive breakout in those areas. Just kind of, I'm assuming there wasn't. Just kind of knowing the action in that overall European market. So I guess I see some buying fatigue. They worked their way up the resistance they couldn't push through. So I don't know if we've really had those definitive breakouts on this move. I see it as a more lackluster move and speaking to some what could be some seasonal consolidation. But to your point, there hasn't really been any areas breaking down at the same time. And even technology, I'm hesitant to get too downbeat on that area. To me, there's other areas that are more compelling. If I wanted to get bearish in terms of seasonal hedges, that's not where I'm looking at. We downgraded consumer discretionary to underweight. We downgraded energy to underweight. Tech, and then probably more, I would even argue on the software side rather than semis. Software, I think, does look vulnerable here over the coming months. But semiconductors coming off of all-time highs in July. And I get it. They fell and they haven't made new highs. So anytime you kind of snap back and you don't make that new high, it's going to look like a lower high. But there hasn't really been any significant breakdowns in that area. Right. And after such a big run, there's a lot of long-term support levels to point to as well. So it's trying to see this turn towards defensive. And I think it's based on one's time horizon, right? Because I don't want to get too defensive here either. Especially in those kind of more growthier areas. I think this is kind of more later economic cycle where that scarcity premium could get placed on those higher growth companies again. I'd be a little bit more worried about some of the cyclical value areas. But with that said, financials still acting well, capital markets in particular. So if I look at that Russell 2000, I think as small caps go, so goes the market.
And that's not something you'd always say. You're saying that currently.
No, I always say that. To me, this is, I was on my CMT Fill the Gap podcast show, and I spoke about the new Dow theory, that rather than looking at industrials and transports, to me, the relationship between large caps and small caps is the relationship that's most important to me, because I think it speaks to market breadth, is looking at small caps. And I see an index on one hand that was just starting to break higher in 2024, through fits and starts, finally had another significant move in July, got pulled back once again It's an index, however, that Russell 2000 that faces formidable resistance still at the prior 2021 highs, around 2,300, 2,400 for the Russell. And while we're not there yet, I think that could ultimately mark the as good as it gets moment, or that would be the point where the cycle starts to top out as the Russell 2000 gets back to those prior peak levels.
Isn't it just a regional banks and biotech story, Ari?
Small caps, no, they all kind of look like that. If you go through all the small cap sectors, small cap growth and small cap, even tech, has a very similar look. They haven't cleared those all-time highs. I don't think there's any of the small cap sectors that have really definitively moved above their 2021 peak levels.
Industrials
showing relative weakness. Of like that had been an area of relative strength. We love this infrastructure paving.
Yeah, but industrials, small cap industrials took out their 2021 highs last year. Continued higher, making new all-time highs. That is the one area that's really shown that strength.
I would think, just kind of knowing the action in the entire capital goods space, that they've probably been weaker of late, that they've lost some of their luster again through that July-August period.
They made new all-time highs into late July, and then at the beginning of last month sold off.
Everything was looking great in July, right? It's what has changed since then. And what's, okay, let's say this sets up for this setback. What's the next move going to look like? Can they reclaim their leadership once again? Because we've seen that in small cap industrials throughout this cycle. They were one of the first areas to take on a leadership role, and it was this stair step higher. Is this going to be another stair step higher, or is this kind of more recent setback going to be a little bit more enduring, and we're not going to see that leadership come back to the market in the back half? As now we're seeing some changes in the kind of bigger picture landscape.
Small cap materials also above their 2021 highs. Last question, Ari, and I'll let you run. I know you're a busy guy. I really appreciate the time. You're the man, seriously. You mentioned Mike Hurley. Shout out Mike Hurley. We talked about the fall day. When you had a big spike where the VIX literally triples overnight, went from 10 to 65 in a hot second, one would expect some expansion in the new lows list. 1 month lows, 3 month lows, 6 month lows, 12-month lows, something. You got nothing. So you didn't get that Mike Hurley fall day like one would think. Like if I would have told you, bro, VIX just tripled overnight, you would have been like, okay, we're going to see some expansion in the new lows list.
Right, and I suppose I misquoted Mike Hurley. His fall day is kind of the first expansion and downside breadth. I was using it in terms of kind of the first signs of something changing here in terms of looking at market leadership and interest rates rather than market breadth, as Mike Hurley uses. And you're absolutely right. We had these VIX readings only seen before during the depths of the great financial crisis and the depths of the COVID-19 lows. And yet this time around, the S&P 500 was only 10% off an all-time high and still above its 200-day average. So that's kind of the very obvious nuance and the difference between the volatility spike we saw now and what we saw then, and why we didn't get this expansion in downside breadth. We didn't really see any cracks in any of the major benchmarks. They pretty much all held their 200-day average, and they've all since snapped back above that. And I saw that as our first inclination, well, you want to buy stocks when that's the case. Here's an opportunity. And we ran some numbers and we showed where even if you do get these volatility shocks, and there has been examples of that, not to the same degree, but when you get big moves in the VIX and the S&P still above its 200-day average, it still has been followed by strong above average returns. And so that did mark a nice little near-term bounce. But again, it's what does it look like going forward? Is that going to be kind of this change in the cycle, and kind of how we estimated it, probably end of the sixth inning, to use some baseball analogy on here. I think we're probably about 2/3 of the way through it.
Listen, Ari, listen.
Different later cycle, not end of cycle.
Listen, buddy, you spend more time on baseball fields than I do these days because your kids are a little bit older. You and I both know that baseball games can go into extra innings. My grandfather once went to a Yankees game that went 23 innings. So we might be in the sixth inning. It don't mean that we're only playing 9.
That's right. But they start with a runner on second now. So, you don't get the
Do
long
they?
innings as
Is
the
that
old
really a
one.
thing?
That is a thing. And
That is some bullshit.
and the
That is
equity
some
cycles have shortened
Bush,
up a little bit too there.
some Bush league, starting with a 1-1 count, right? Like that sort of thing. That's some bullshit. Okay.
And to your point,
last thing.
I love that idea. A lot can happen, and that's why you want to be open, and why I'm hesitant, say not the end just yet. Let's see. There we could go extra innings. You're absolutely right.
Ari, I figured you'd like that. Ari, mathematically, you can't have a correction or a bear market of any kind without the prices of stocks falling. So before making such grandiose proclamations about a market correction, shouldn't we first see some kind of expansion in new lows? In other words, some evidence of stocks falling in price, which we have not seen. Shouldn't that be front and center in terms of, if you are concerned about this overall market, watching the new lows list? Isn't that got to be front and center? Just math?
Yeah, for sure. And as I always get asked about levels, what's the level we're going to, Harry? And I said, well, it's not the level, it's how you get there. And right at the end of the day, right now, as it stands, we're making these tactical conditions aren't very attractive. And so it seems to be, and it would make sense that there would be some market weakness here. And what does that downside look like? Are we finally going to see a little bit more expansion in new lows, at least on a shorter term basis? Maybe even set up some positive divergences in the VIX and some RSI readings versus where we were in July, and set up some bullish divergences, even if we were to make a lower low. So I think the setup is there, where this is still a seasonal setback that you can buy selectively. But again, I'm not expecting the same type of year-end rally as we saw last year, I guess, just the way the market's shaping up.
I mean, it's hard to expect something as powerful as we saw at the end of last year. That was of historic proportions. So taking the under there is probably a safe bet.
Yeah, but I'll leave you with some facts right here, though, JC. Median bull market cycle going back to the 1930s, up 70% over a 2.5-year period. We are still below average in terms of both magnitude and duration. So yeah, as we've kind of put it, a move to S&P 6,000 at some point, let's say through the first half of 2025, now you're just getting to your fair value of what these bull cycles look like. So we still, I guess the point being is that cyclically speaking, far from a bubble, steadiness underappreciated, actually still below average in terms of both just the upside and duration.
So this parabolic, unsustainable bull market that needs to end any minute now, there's no evidence that there's any truth to that at all.
I don't see it in my work. We like to joke around. How can we expect a bubble-like collapse without bubble-like returns? We haven't seen returns anywhere close to the late 1990s apples and oranges comparison difference.
Ladies and gentlemen, Mr. Ari Wald bringing the heat this morning. Let's go. Ari, you're the man. I appreciate you so much.
Appreciate you guys. We'll talk soon.
Soon in the city.
Bye.
Adios. Ari Wald, guys. Come on. Give it up for Ari. I've learned a lot. Ari's a good example of, when we talk about, our predecessors and, learning from the people that came before us, and we stand on the shoulders of giants and all these things. Ari's a great example of our contemporaries that we can learn from and get ideas from. Ari and me are like pretty much the same age. I think we're only like a year or two apart. Maybe we're exactly the same age. Todd Sohn's another one, contemporary, didn't. What's that?
He's not your age. He's not your age. He's my age.
Todd's younger than
Todd.
me? He just seems so much more mature than I am.
He is.
But nevertheless, I mean, just great examples. I'm going to be on the Bank of America apparently has a podcast now. I have had to send Social Security cards, blood samples. The amount of security for this podcast that I'm doing for Bank of America and Paul Sienna is off the charts. The morning show does not have those kind of hurdles to jump through. But Paul Sienna, another great example of, contemporary of ours that, I like to learn from. Ari, for sure. Ari's the man, dude.
Did he like the semiconductors?
He's not convinced that this is a complete collapse in the semis. He kind of copped out a little bit, on that answer. But good interview overall. He agreed with the lack of new lows. He's a big high beta, low vol ratio guy, as am I. He puts more weight on small caps than I do, right? So, Ari's the man, but we don't have to agree on everything. That's the beauty of it. He goes hardcore with small caps. We got individual companies that are worth more than the entire Russell 2000 combined. So I have a hard time just giving it too much weighting, in my opinion. But to each its own.
Look, all those risk appetite ratios are starting to look the same way, and they're all bearish.
Can we please talk about the hot corner, because we had some big transactions taking place? Yes, we did.
Did we? Yeah, sure.
Can we, Spencer? No, not today. No love. Spencer's having a hard time in the Jersey Shore. Spencer,
Really
come on.
struggling.
Are we gonna get a little hot corner action? ACDC, big buy. We're looking at 13. We're looking at $5 million from Dan H. Wilkes. Is that right? I threw it at the top of the deck, Spencer. So this is Dan H. Wilkes, $5.1 million in ACDC. Been seeing a lot of transactions coming in on ACDC, right? Over the last few weeks.
Yeah. Problem remains that the chart setup looks like a short,
terrible.
not a long. Yeah. So PSEC stood out too. We had two executives in that one, CEO, CFO. That's a nice combo.
No, this one looks
About as good
terrible
as it
also.
gets. Better though. Back above the pivot lows at least.
Oh
maybe you
yeah.
could trade
All
it
right. Yeah, we're
against
back
that
above
low.
those pivot lows around $5.
Well, the difference with ACDC is it retested, tried to do something similar and failed. And then Dyne is really the one that stood out today and we spotlighted. So that's Dyne Therapeutics, DYN. A lot of volatility in this name recently. It broke to new highs, was flagging there, and then failed miserably. It was down, 30% in a single session just Tuesday. So this one needs more time, but it's right there. If you want to play it against those prior cycle highs, the 2021 highs, it's right around 33. We're just north of there this morning. So that chart looks pretty good. And we continue to see this in biotech where, there are just lots of charts that we're interested in buying these days. The indexes, especially IBB, really not doing a good job of illustrating what's going on beneath the surface in this group.
$3 billion, not small. $1 million purchase, not small. Base here, not small. Big base, right? Decade-long base. But you got to be above. You got to be above those levels, right? You got to be above 37 to take this seriously. Is that about right?
Yeah, and we had another biotech. Guys, go to the website and check out the freshly squeezed from yesterday. That biotech that we covered there is awesome. And like half of the shares outstanding are held short. So
I love that.
We think some big squeeze potential. But bottom line, what I'm trying to say is the biotechs keep popping up and they're looking better and better. I think we're going to start doing something monthly. New little biotech universe. You like that?
I absolutely love it. I love it just in general, having a stronger focus on biotechnology, number one. Number two, there's a zillion of them. So even in good markets, you're going to find shitty ones. In shitty markets, you're going to find great ones. That's just great. They live and die by their own sort of situation in many of these cases. Like I said, there's so many of them. And I don't want to say too many because there's too many regional banks. That we could say there's too many. So many companies trying to save our lives. I'm okay with that. I'm okay having, 250 biotechs in the Russell 2000. All these people are trying to save our lives and they're going to make a ton of money if they do. That's pretty cool. We should encourage that sort of thing. Would you agree?
Absolutely. I think they should set up a fund and reward people when they cure diseases.
Dude, they should, right? Instead of these communists telling people that they can't make money because they discovered this drug and da 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 da. Bullshit. These people should be made so wealthy, and they should be put on a poster board, and so other people could see, look how much money these guys made because they cured pancreatic cancer or whatever. You know what I mean? Like that, they should be celebrated, not like
there's
not like
there's a problem. There's a problem in the industry where just simply due to the business models, they're not really incentivized to cure things. They're incentivized to treat things. So the guys who make a ton of money in the biotech world are the ones selling painkillers and Percocets and everything else that's not so good. And charts like companies like Gilead who cure Hep C, their charts shouldn't look like that. There should be a huge monetary reward for curing things because there's no future cash flows, right? So you got to do something to kind of make up for that.
And then instead, all these politicians are breaking their balls for making money for the things that they discovered and the things that they built. They should be celebrated. They should be, I mean, and they should be like promoted. Be like, look what these guys did, and look how much money they made. Go do something like that.
Yep.
You know, right?
Absolutely. Yeah, the universities are part of the problem too.
Yeah.
Yeah.
All right. So we had a great conversation yesterday in our team meeting. I want to bring in Sean. Is Sean available? Is he here?
Question about the Coinbase in the chat from Elijah. I wonder if that's brother of Sam. Coinbase, 7 straight down days. It's not good. It's a top for now. It's definitely a top. It's a top with a successful retest for now. However, one thing I will say that does stand out as we're green here today is that they just can't get momentum oversold in this thing. It's the same situation with like Solana, right? The strongest assets in crypto been sideways seemingly forever by now, but the strongest ones are staying out of oversold range over and over and over again. And it looks like Coinbase is going to just skirt an oversold reading on the RSI 14 here today. So that's, if I could, look, I'm reaching for nice things to say, really. But it's true. It's true.
Shall we get into some derivatives?
Some derivatives.
Derivatives, please.
Yeah, let's see.
Shawnee, baby, that is one ugly hat you got on there.
Top of the morning, fellas.
Oh, it looks just like a blob of paint.
You know, I've never met a nastier sports fan than JC Parets.
It's just that your
never has anything
teams,
nice to say about other people when it comes to sports.
It's just that your
it's a bad
favorite
trait.
teams are the teams I hate the most. Buffalo and the Gators. Like, God damn it, could you pick two worse teams? Oh.
You know, this is why we get along. You and I are the yin and yang. This is why I'm married to my wife. We're both a yin and yang. It works for my world. Nice hat. Nice hat, Strazza. You earned that hat.
Favorite baseball team, Cubs?
Yep.
Favorite hockey team, Blackhawks or Leafs?
I mean,
Favors.
All three.
Fair.
But you're not a Bulls fan?
No, I missed the whole Jordan thing. You know, when I moved to Chicago, Jordan was already long gone.
Sean can't even dribble. Have you ever seen Sean play basketball?
Wow.
Sean, it's not.
Honestly, I didn't get into basketball until my wife signed me up unknowingly to coach my son's basketball team. And that got me into basketball. So I'm new to basketball. Basketball's a new thing for me.
His kid's pretty good. Sean, not so much.
He's good. He really is. My son is kicking butt on the court. His team won the championship last season.
Ain't that something? Something the Buffalo Bills know nothing about. So moving right along to the publicly traded markets, we put on yesterday. Sean's not an intermarket guy. Sean does, when we talk about yield curves and credit spreads and commodities, Sean just like he does his own thing, and then we call him in when we start talking about such things. Yesterday in the meeting, Sean coming in hot. I'm buying bonds. Oh, it really warmed my heart.
Everybody's doing it.
It warmed my heart.
But seriously, like everybody's doing it. Like everybody's into the bonds right now.
Well, that may be the case, Strazza. That doesn't make me happier about it. I don't like doing what everybody else is doing.
I mean, everybody's into it.
Well,
Everybody
the
likes it.
hedgers are buying the long end of the curve. The specs are buying the shorter end of the curve. So it's a little mixed in terms of everybody's doing it. So I think it's got to be a little more specific. Everybody on our team, to Strazza's point, is doing it. I don't think ever, as long as I've known Sean, not once has Sean come to me and said, "Hey, JC, we should buy bonds."
Well, let's talk about why we're doing that. And the big reason, and we talked about it in our meeting yesterday, is that we're looking for, and there's a good opportunity now to put on some uncorrelated risk, right? We had a period of time for much of this year where it was a bull market, and just by the act of getting involved in the best setups, that we, all of a sudden we have a portfolio that's pretty much highly correlated. It's all long tack. Those are the trades that are working. And now with the market kind of showing some indecision, showing some mixed signals, we're seeing that a lot of sectors and stocks are becoming a little decoupled. I think you wrote about it in a note this morning, JC, about how the markets get volatile, correlations go to towards one, right? Everything moves together. People get afraid together and they sell everything, and they get FOMO together and they buy everything, right? But now we're starting to see sectors kind of separating themselves, and opportunities for us to diversify the portfolio a little better. And we did a bonds trade today. I put a gold trade on last week. These are things that I don't normally do, but I like doing it right now because it's given me a little bit more diversification in my portfolio.
And by the way, to
Everybody's
your
doing
point before, diversification's easier to do these days with correlations off so much.
Yes.
So we got that going for us. For those of you looking for less correlated things, right, Sean? Right, Strazza? This is your point.
Hell yeah. I'm so into it. Can we throw up these charts of the 5 and 10 year? This is the trade. Like Sean and I were talking about it yesterday, and the way we did it in breakout multiplier, we do need a big move. We went out to December, but rates are completing a multi-year topping formation, right? So this is when you get big moves from bonds. This is the 10, and it's going to follow the 5, right? So the 5 already breaking down here. Nasty looking double top, completed. See ya. First continuation pattern confirmed, going lower. 10 will follow. And these bond funds, whether it's TLT, IEF, IEI looks the best. The further down on the shorter end of the curve that you go, the better that they look. But this is the situation. Back to the well. We're buying the same pattern we've been buying successfully this whole cycle. It's no different for bonds. All right. We got the charts. That's it. You like them? All right. That's all I got.
Is that all you got? I got one. I want to look at this one, to your point, and I want to hear your thoughts, because this one we've been quiet with this one for a while. It hasn't really been all that helpful. But what a question I'm wondering is, are we back? And I'm throwing it up at the top. Spencer Israel, if you could like to throw up slide 2. Are we back? Does this matter? Give it to me.
And chat, while he's doing this, what are the best prop bets for tonight? I'm interested in the props. I'm trying to get into the
We'll
props.
cover that. We'll cover that in recess.
We'll cover that in recess. Does this matter,
Okay,
Strazza?
good. I want to know. I want to hear from the chat. What this?
You're not thinking
No,
about
I'm
it
not
at all.
thinking about
So
it. Nope. This thing stopped helping us like so many years ago. I literally don't even look at it.
That's why
I remember when Dr. Copper was a great indicator. These days,
Dr. Copper partied too
part.
much in college, and his grades weren't good enough to get into an American medical school, so he went down to the Caribbean to get his medical degree. That's Dr. Copper.
that's a lovely short story.
I have a few friends that happened to.
Yeah, it used to be full of information, is the truth. This is a great intermarket indicator for us. Things changed a few years back, and I don't know if it'll be great in the future.
This chart of copper making new relative lows versus gold is not bullish of bonds, is what you're saying.
It is bullish.
You just said it doesn't matter. Now it is bullish because it's convenient because you're long bonds.
Listen, copper gold's going to move with interest rates. It's what it should do.
Though.
Okay.
But now it is.
Again, I'm not thinking about it. I'm not really thinking about it. The reversal pattern in bonds looks great. Yields are breaking down. This would not disconfirm that thesis, but I also don't care that it's confirming it.
All right. But worth bringing up, right? Worth discussing. All right.
Fine.
Let's get to recess so we can just abuse Sean again. Oh, Sean, you know, that was really something on Saturday. It was a good victory by the Miami Hurricanes. Florida Gators embarrassed themselves on national television. I will say I rarely have something nice to say about the Florida Gators, but that freshman QB, the kid looks pretty good. I mean, he looked terrible on Saturday, but they were playing a far superior team. But just generally speaking, he looks, composed for a young kid, nice arm, athletic, So when he transfers next year, you'll probably miss him.
Yep. Well, look, I said this in our meeting yesterday. I'll say it again. Enjoy your September Heisman. This is an annual thing in Miami. You guys get all excited the first few weeks of the season, and then the reality strikes. I'm glad that you actually put a solid team on your schedule this year. I mean, you guys have the worst schedule in college football, the weakest schedule in college football. Florida Gators, the hardest schedule in college football. I don't know if you noticed. So I don't expect the Gators to do well today. It's not set up for them this year. This is a quote unquote rebuilding year.
It's one of those. All right.
Yeah.
All right.
It's okay. Hey, look, I got nothing bad to say about the Hurricanes other than, enjoy September. You guys always have a great September. The hype machine gets going full bore every year. There's going to be Heisman talk about your QB, mostly from you, and it's going to go away.
I haven't said a word. You're the one who keeps saying the word Heisman. I haven't mentioned it once because, you see, we win championships. We don't give a fuck about the Heisman.
I'll tell you what. There are 3 Heisman candidates here in the Colorado Buffaloes. I don't know if you saw that Colorado Buffaloes game last week, but holy cow.
Schedules. Do they play any team with men on it, or do they play just only girls? How does that work?
Look,
they didn't.
I'm not going to sit here and say Colorado Buffaloes are going to do anything amazing, but there are some individual players on that team that are amazing.
Did they squeak by North Dakota State or something?
They didn't even cover the spread against North Dakota State.
First of all, no shame in North Dakota State. Those guys are perennial national champions in their division.
Here we go. Listen, I love Deion Sanders. I got nothing bad to say about the guy.
They're good. They're one of those perennially good bad.
Dude, I'll tell you
teams.
what, though. I mean, look, I'm not a Colorado Buff super fan. They just happen to be right where I live. But man, that Travis Hunter. Holy cow, is he a great player. And Shedeur Sanders, if he's got an offensive line that can protect him, he's going to put up some numbers. Holy cow, they are fun to watch.
Yeah, they are fun to watch. I'll give you that. They're not very good, but they are fun to watch.
This does happen to Miami every year, JC, where we do get excited
every year.
We come out hot. But what's different about this year is we just won a big rivalry game. So,
hey, I, for one,
Miami.
I love that the Gators and Miami played. I hope this would become a thing every year where all 3 Florida teams play each other every year. That should happen every year.
It used to be, and then Florida got scared and they stopped playing us.
No. That's not it. Florida plays in the SEC, in case you didn't know. They have the hardest schedule every year of any team. They don't need any more hard teams. Right. And I will give you that. Miami's a hard team, right? They're not a cupcake. The Gators don't need that. That's why they don't play every year.
Oh, they should. It should be a law because it's a law that Florida State and Florida have to play.
I mean, who does Miami play? Clemson? Come on.
They don't play Clemson this year. They play Florida State. They play at Louisville.
Can you name one team in the ACC that's scary? There's not a single team in the ACC that's scary.
Yeah, I guess. I don't know. They play in the ACC. I don't know what you want me to tell you. They're playing the schedule that they have to play. But this is
why the Gators never play.
At the end of the year where all the best teams, you wouldn't know anything about that, but all the best teams, they get together and they play one another to see who ultimately the best team is. So that's what's going to happen. So there'll be plenty of difficult teams along the way. It's just math. It's just what it is.
Is that kind of like the NFL playoffs where the Dolphins don't ever see January? Is that kind of the same thing?
No. It's not anything like that. It's not anything like that. It's very different. Very different. I know we're getting late in the summer. Spencer Israel down at the Jersey Shore. I'm heading down there Saturday, as a matter of fact.
Nice.
Heading down to Avalon for a few days. So I will be out on Monday. So you're gonna get the Strazza show on Monday. and I will be back on Tuesday. But I just want to give a big shout out to the Jersey Shore. I want to give a big shout out to the state of New Jersey. State of New Jersey, gets a lot of shit from the New Yorkers. They like to make fun of New Jersey. I am one of them. People from Philadelphia hating on New Jersey. I got to tell you, there's a lot of New Jersey that is lovely, like northern New Jersey.
I appreciate that, JC. I appreciate that.
I got you, Spencer. Spencer's been hearing that Jersey hate for a long time. I got good things to say about New Jersey. The Jersey Shore, these knuckleheads and their stupid MTV show, like where they go, like nobody goes there. Where I go in the Jersey Shore, those type of people are not allowed to go. They can't afford to go. So there are lovely, beautiful places.
I agree with you, JC. The farm country in southern New Jersey is absolutely beautiful. Absolutely. I agree.
I'm a northern Jersey guy. It's good up there too. Different.
The northern Jersey. The Hunt coming up. Anybody have a date on the Hunt? Anybody going to the Hunt?
What's the Hunt?
The Hunt is like a giant tailgate party in the fall in Jersey somewhere. And supposedly there's like a horse race. I never seen any horses.
I've never been to the Hunt. Maybe this is the year I go. I don't know.
Dude, you've never been to the Hunt. Go to the Hunt a few times before you start having kids, because then you can't go. Now you just can't go. Go to the Hunt. Good times. Get a big crew, tailgate party. You're better off going with somebody who goes every year and has got the setup, so you just show up.
Got it.
Hey, so who kicks off tonight? Is it Kansas City and somebody?
Baltimore.
Chiefs Ravens. The line is 2.5. So I'm looking through the prop bets. JC, longest completion for Tua over 37.5 yards. That sounds
longest
like money.
completion is how much?
37.5 yards.
I would take the over on that. And it's largest complete, which includes the yak.
Okay.
That includes yak.
Yeah.
So are we going to get overexcited about Miami Dolphins early in the season too, like we do every year? Okay.
If they stay healthy, there isn't a better team in the league. And the Super Bowl's in New Orleans this year. I've only been to the Super Bowl twice in my whole life. Both times were in New Orleans.
I'm talking to JC for the first time after the Miami game, Sean. One of the first things he says to me, what did you say? National championship is in
ATL.
Vegas.
Yeah, national championship game this year is in Atlanta. Super Bowl's in New Orleans. I plan on attending both.
Miami's
down,
not
buddy.
even going to win their conference. They're not going to be in the playoffs.
Which Miami are you describing?
The Miami Hurricanes.
The Miami Hurricanes are not going to win the ACC. Who is?
I don't know. Some other shitty team.
I don't think so.
All right.
And no, there will not be a Chiefs.
That's enough.
There will not be a Chiefs three-peat this season. No way.
No. Yeah. It's gonna be Miami.
Chiefs.
Yeah, we're all over the Chiefs. We're all over the Chiefs.
Yeah.
I don't have any Chiefs hate for the record. As a Bills
I
fan,
don't either.
Yeah, you might think that I do, but no, I respect them. Great team. They're fun to watch, but I'm over them.
Priest Holmes was the man.
I don't like it. That's now you're dating
Not
yourself.
that long ago. All right, guys. I appreciate you guys being here. Spencer Israel, I appreciate you fighting through the bad internet of the Jersey Shore. NASDAQ 100 futures up almost a 1% right now. Quite the turnaround Thursday here. For you bearish folks, I would advise you to watch the new lows lists, which has been non-existent. And if we were to see a correction or bear market of any kind, mathematically, you should expect to see stocks falling in price. We have yet to see that. So that's front and center for me.
And it can happen fast when you see it. It happens fast.
You'll know it when you see it. So, all right, guys. Adios. See you in the morning.
All right. If I can end the show properly. We'll see.
I can't take no loss. I don't even know what it costs.